Welcome to the third part of the discussion on budgeting. So, we ended on the master budget. So, we will be able to describe the master budget for a manufacturing company. So, what does a master budget means? This is an integrated set of operating and financial budgets for a period of time. So, let us take a look at Exhibit 7, yung master budget for a manufacturing company. This comprise of the operating budgets and the financial budgets. Okay. So when we say master budget, this means this is a set of all the operating and financial budgets. Under operating budgets, lahat yan ng nakikita mo sa iyong income statements. Okay? And yung nasa financial budgets ay yung nakikita mo sa iyong balance sheet accounts. Like the sales budget, cost of goods sold budget, production budget, direct materials purchases budget, direct labor cost budget, factory overhead budget, selling and administrative expense budget. Eventually, this will comprise of your budgeted income statement. In the financial budget, we have cash budget and the capital expenditures budget, which will form part of your budgeted balance sheet. The master budget begins with preparing the operating budgets, which form the budgeted IS. Ayan siya. And this IS will be used now uh, to look at the relationship between the operating budget leading to uh, yung operating budget will be used in looking at the budgeted income statement, which will be used in looking at your budgeted balance sheet. Okay. Let's take a look at this exhibit A kung paano siya ginagawa. So, ang una nating ginagawa under this is the sales budget. So, we forecast kung magkano ang magkano ang at what goal do we look at our sales in terms of number of units and number of pesos, at kung anong amount ang kailangan natin to be able uh, to accomplish yung goal related to sales. Yung mga sales targets natin, ano ang related cost para ma-achieve natin yung mga ganong sales targets in terms of units and in terms of pesos. This will also be used in the production budget. At sa iyong production budget, this will comprise of your direct materials purchases budget, kung ilan ang dapat na bilhin na direct materials while the production is running, the direct labor, yung workforce requirement in the factory, and the overhead cost, factory overhead cost. Uh, upon computing the budget, the production budget for this, we will now be able to project our cost of goods sold budget. The cost of goods sold budget and the selling and administrative expenses budget, which uh, information is based also on your sales targets and sales budget, yan ang magko-comprise ng ating budgeted income statement. So let's take a look one by one. Okay. Under the sales budget, we estimate it begins by estimating the quantity of sales. The prior year sales are often used as a starting point. So let's take a look at this. To illustrate, ito yung Elite Accessories. This manufactures wallets and handbags that are sold in two regions, the East and West regions. So meron siyang sales volume for East, sales volume for West. And then ito yung unit selling price. How do we look at this? So simply lang, we just multiply the sales volume with the unit selling price to get the total sales. So this will be your total revenue from the sales. So this is your sales budget, 13,336,000. Okay. Multiply lang yung sales volume with the unit selling price. So ganun lang, simple lang ang pag-compute under the sales budget. So tingnan lang naman natin how the production budget is identified. The production budget should be integrated with the sales budget to ensure that the production and the sales are kept in balance. Kasi ito yung sales budget mo, dapat yung production mo is at par or balance yan. Kasi kung mas mababa or mas marami, hindi efficient ang yung operations sa production. Let's take a look at this. Yung expected units to be sold. So, ito siya, number of units. Desired units in ending inventory minus the estimated units in beginning inventory, and then this will be your total units to be produced. Ito ay magagamit mo ito every time that we look at the production budget. And normally, in the SIPALE board exam, ang karaniwang tinatanong dyan is yung kung paano mo i-squeeze yung items. Example, the desired units in ending inventory. Yan minsan ang tinatanong. Magkano dapat yung estimated total units to be produced, ganon. So, kailangan ma-identify mo at matandaan mo na ang concept under the production budget. The expected units to be sold, which is based in the sales budget. Ito yung dapat na mabenta. Ito yung desired units in ending inventory kasi normally may policy ang company na dapat merong tayong ending inventory na ganito para hindi ubos na ubos ang ating inventory. So ganun siya. Then the estimated units in beginning inventory, normally yan ay given in the problem, and then you will compute now your total units to be produced. Yung units na ah, kailangan mong mabenta, yung desired, ibig sabihin, ito yung dalawang dapat mong ma-produce at yung beginning minus, ito yung dapat mong i-produce ngayon, yung total units to be produced. So, let's take a look at this. Binigyan ka ng beginning inventory, January 1, and then desired inventory or the ending inventory at December. Okay. The expected units to be sold from Exhibit 9 is 528 and 280,000. Paano na-compute yan? Tingnan natin. Eto po yun, yung units, 528 and 280. Okay. Desired ending inventory, yan po siya, inad. Total units available, and then binawas yung beginning. Then you will get your total units to be produced. Okay. Let's go now with the direct materials purchases budget. The direct materials purchases budget should be integrated with the production budget to ensure that production is not interrupted during the year. Okay? Dahil nga yung direct materials will be used in the production. So, mahalaga na i-budget natin yung purchases natin at yung time period related to that. So how do we compute now? We first determine the budgeted direct material required for production. So paano yan mako-compute? The budgeted direct material is equal to the budgeted production volume multiplied to your direct material quantity. Direct material the budgeted direct material required for production is equal to the budgeted production volume. This is from Exhibit 10. Then you multiply the direct material quantity expected per unit. Tingnan natin itong illustration. So, ito yung wallet and handbag, the leather and lining. For the wallet, the leather requirement. So, merong requirement yan. For handbag, ito yung requirement naman niya. Okay? Step 2 tayo. Okay, isa-substitute mo lang naman yan dun sa general formula under step 1. Materials required for production in step 1, desired ending, estimated beginning, and then direct material purchase. Parang ganoon sa production budget. Step 3, the budgeted direct materials to be purchased is computed as follows. The budgeted direct material to be purchased is equal to direct material quantity to be purchased multiplied to your unit price. Okay, let's look at now at this sample, yung i-complete natin yung direct materials purchases budget. Okay, so eto na siya under Exhibit 11. Okay, direct materials, leather, and lining. Now, meron tayong square yards required for production, so wallet and then handbag. Makikita mo yan sa Note A and then Note B. 156, 365, 52, and 146. The desired ending inventory is 20,000 and 12,000. The total, so yan na, i-add mo lang po yan and then you will get the total square yards available for each direct material. The estimated ending inventory for January 1, 28 Y1 is 18 and 15,000 for leather and lining respectively. So ngayon, ang kailangan mo ay total square yards to be purchased is 523 and 195 for them. Ang unit price per square yard is 4.5 for the leather and 1.2 for direct materials. So kapag i-multiply mo yan, you will get now the uh, the dollar value or the dollar value on this example, yung ano niya, yung dollar value na niya kasi kanina number of nasa yards kayo multiply it with your uh, unit price. So ito na po yung budget mo for your direct material purchases. 2.3 million for leather and 234,000 for lining. A total of 2.587500. Okay. Let's proceed with the direct labor cost budget. So the direct labor cost budget estimates the labor hours and related costs needed to support budgeted production. Production managers study how work methods to provide estimates used in preparing the direct labor cost budget. So how do we compute this? Essentially the same dun sa purchases budget. The budgeted direct labor hours required for production is equal to the budgeted production volume from Exhibit 10 and the direct labor hours expected per unit. So let's take a look at the wallet and the handbag. So meron siyang requirement under the cutting department and sewing department. Sewing department. So kada unit merong naka-identify na number of hours na kung gaano siya katagal gawin. Okay? Let's take a look at um, the completion of the direct labor cost budget. So, meron tayong hours required for production as computed. Ayan na siya, number of hours. Then you multiply just with the rate. Ito yung rate niya per department, 12 and 15. Then you will get now your direct labor cost budget. Okay. Ano lang siya, mabusisi lang siyang gawin. The budget uh, for each component of the production, pero madali lang naman siyang i-execute. Medyo ano lang siya. Kapag pinagawa sa'yo yung components of the master budget, medyo matrabaho kasi ang dami. But it is easy once you get the logic on how it is done. Now, the factory overhead budget. This estimates the cost for each item of factory overhead needed to support the budgeted production. Okay. The factory overhead cost budget shown in Exhibit 13 may be supported by departmental schedule. So, pwedeng may schedule siyan. For example, the supervisor salaries. So, naka-identify yan on a particular schedule kung bakit na-compute yung 360. Power and light, depreciation, and among others. So, normally, ang factory overhead cost budget, enlist mo lang lahat ng factory overhead costs related to a particular period. Okay. Let's look at the cost of goods sold budget. The cost of goods sold budget is prepared by integrating the budget such as the purchases, Exhibit 11, labor costs, Exhibit 12, and factory overhead costs, Exhibit 13. Kasi 'di ba, ang cost of goods sold is your TMC or your total manufacturing cost. 'Di ba, ang the component, kailangan ma-compute mo muna yung, doon na tayo magsimula sa cost of goods manufactured plus the beginning finished goods and then less the finished goods ending, 'di ba? So by this we integrate yung budgets na in-identify natin under exhibits 11, 12, and 13. Okay. Elite Accessories expects the following: the DM, WIP, and finished goods inventory. So meron tayong beginning and ending inventory given here. So let's take a look at the uh, example, yung cost of goods sold budget. So ito yung medyo mahaba na kasi incorporated na halos lahat yung items doon. Finished goods, so tama, ito siya. Then itong identify dito yung cost of goods manufactured, ito. Then minus mo lang yung ending to get your cost of goods sold. Okay, etong budget nito, yung purchases, yung direct labor and overhead, this comes from their respective budget. So kung mali ang ginawa mo under purchases, labor and overhead budget, mamamali ang yung cost of goods sold, and that would be a comprehensive mistake for you. Kumbaga, mali ang magiging solusyon mo diyan. At kung nasa CPA board exam ka at yan ay comprehensive problem na sunod-sunod yung questioning, and normally in the CPA board exam, yung maling sinagot mo kapag ipinlat mo yon dun sa mga maling isinama mo dun sa ibang items ay meron din siyang sagot na mali din on the cost of goods sold budget. So, dapat maging particular tayo on step 1 pa lang, dun pa lang sa pag-compute ng purchases, labor, and overhead budget because that would be a comprehensive mistake for you. So essentially, ganun lang yung pag-compute natin ng cost of goods manufactured ay essentially the same. 'Di ba? We begin with the direct materials beginning plus the purchases. So ito na yung available for use minus mo yung ending materials, direct materials. Then ito na yung direct materials or raw materials placed in production plus mo yung labor, plus mo yung overhead. This will be your TMC or your total manufacturing cost. I-add mo ngayon yung work in process beginning, ibawas mo ngayon yung work in process ending, that will be your cost of goods manufactured. Cost of goods manufactured plus your beginning finished goods inventory minus your ending finished goods inventory is your cost of goods sold. Okay? Mhm. I think this is an example also. You may refer to this as you look at your uh, master budget. Exhibit 15, selling and administrative expenses budget. The sales budget is often used as a starting point for the selling and administrative expenses budgets. How? We enlist now the sales, selling expenses and then administrative expenses budget. Bakit nagiging starting point yung sales budget on the selling and administrative expenses budget? Because remember, itong sales salaries expenses ay yung sales yung component ng tinitingnan kasi natin on the sales budget kung at what target uh, do we intend to go at under the selling and administrative expenses budget, dapat controlled natin yung cost under the selling kasi hindi pwedeng mas malaki yung cost na gene-generate natin versus the revenue na gene-generate natin under our sales budget. So ganun yung yung explanation niyan diyan. This is also just like the overhead budget. This selling and administrative expenses budget should be supported by schedules. For example, itong sales salaries expenses, how is it computed? Ilang selling personnel ba yan, selling staff ang andyan. Itong advertising expenses, dapat may schedule din yan, ganon. Yung office salaries, rent, and among others. Now, when we are finished done doing the cost of goods sold and the selling and administrative expenses budget, we can now proceed with the budgeted income statement. So ipa-plot mo lang po yung lahat ng component. One, yung na-compute mo sa sales budget, ayan, andyan siya sa revenue from sales. Cost of goods sold budget, andyan siya sa cost of goods sold. This is lifted from Exhibit 14. Yung selling and administrative expenses, yung na-compute mo kanina from Exhibit 15. Kanina 14, ngayon 15. Then now you can get your operating income. So there are other revenue and expenses such as interest expenses. Isama mo lang po dyan. Then income tax and then you will get your net income. So by this, you look at a budgeted income statement. Remember, this is budgeted. So hindi pa nangyayari. These are not actual results of operation. So bakit ginagawa itong budgeted income statement? For us to foresee the future at makita natin kung talaga bang promising ang magiging result or output ng ating plan of actions. Kasi kung hindi, pwedeng i-recalibrate natin yung factors na nandoon sa ibang item sa budget. Pwedeng taasan natin yung selling price, puwedeng magtipid tayo on overhead, puwedeng magbawas tayo ng labor cost para lang mas tumaas ang ating net income under our budgeted income statement. So gano'n ang mindset ng managers when we look at management reports. And remember, as I have always been introducing under this course, yung management reporting, mahalaga na ma-identify natin yung mga ganitong budgeted reports because this will uh, aid or this will help the management, the top management, the higher management, to make decisions that will better the organization. Okay, I think I have to end the discussion video by this time. Tapos na po tayo sa ating operating budget. So, the last part will be the financial budgets, the cash and the capital expenditure. Please continue on the next video for the last part, I think, the the budget and budget topic related to management reporting. Thank you.